Dear financial management students, I'm Abeel Ahmed, financial management expert. Let us discuss a question on NPV. And this question, as usual, we have taken from Study Hub. And we'll be doing question number 13. Let me take out the pen. A company is appraising a 3-year project. So the life of the project is 3 years. Initial outlay on January X4 is 30,000. Initial investment is 30,000. The project is expected to give the following cash inflows at the end of each year: 10, 20, and 25. All of the above cash flows are before taking of account of a specific annual inflation 5% per year. All the cash flows are without the specific inflation of 5% per year. Nominal WACC is 14%. Nominal WACC means with inflation. Using nominal approach and the discount rate, so they are categorically written. There will be working on nominal cash flows. So let's do it. Looks very simple. Initial investment. Sure, initial investment is minus 30,000. Now let's take annual cash flow. Year 1, it is 10,000, but it will increase by 1.05. Second year, we have got 20,000 multiplied by 1.05 power 2. For the third year, 25,000 multiplied by 1.05, and the power is going to be 3. Okay, these are the annual cash flows. Discount rate they have given us. So let us first calculate total cash flows. Very simple. So here comes to 30,000. Then obviously option of drag should work. Cost of capital. Students, they have given us cost of capital discounted 14%. And in exam, of course, shortcut of NPV is available. So you should be using the shortcut of NPV. So let's calculate NPV of the project. NPV. Take the discount rate, comma. Then you will start taking the cash flows from T1 onwards. Shift and the right arrow, bracket close, plus initial investment. This is coming in percentage because I did not select. Okay, now the answer is 15,711. Let's see what is the answer of Study Hub. You can see that the Study Hub answer is more or less same, which is 15,700, and we are having answer of 15,711. This is whenever you'll be solving the same question on a spreadsheet, you will get a little bit difference, and which is perfectly fine. As far as you are conceptually okay, you will get marks. Okay. And one thing is, students, don't forget to get the benefit from our crash courses. Plus, Abeel School of Accountancy gives you the world best, I would say, WhatsApp support to our enrolled students, of course. And one thing where I want to end this concept building video. Students, always remember one point. Each and every student of ACCA is having the same objective. We know that objective means something which I want to achieve in the short term, quantifiable. So every student is having the same objective in the short term to pass the paper. Okay. In the long term, of course, the goal of every student is same. The question is, even though every student is having the same objective, why the results differ? The difference making thing is not the common objective. Objective is common. Then why results are very different? So the difference making thing is the process. The process which you have to follow to achieve your objective. And Abeel School of Accountancy, the day you will get enrolled at our college, from day 1 till day last, we give you the process. All you need is just follow that process. And once you will start following that process, then passing the paper, it will become a fun activity for you. But you just need to follow the process. Over the period of time, what we have done, what makes our passing rate so high, that is the process which we have developed. And we have got such tips that once a student, of course, get enrolled at our college, and we provide those tips and tricks to our students. And obviously, after listening to those tips and tricks, they start following our, obviously, process as well, then they will never fail. So simply, student, once you get enrolled at our college, we'll show you the process, what you exactly need to follow in order to pass this paper in first attempt with flying colors. So thank you very much watching this concept building video. Thanks a lot.